Let me just make sure we're going to get some chat here. All right, let's just make sure we are live. 1 second.
Yeah, no worries. Yeah, I've never used
Okay, great.
before.
All right, guys. It's going to take a little bit of time to get some people. You know, the weird thing is, all this restream stuff used to have, like, I could completely see how many people were live. They stopped doing that. Like, it says 0, but I know there's tons of people watching already.
Oh, for sure. Are you can you make it so I can enable share just because then I'll share
Yeah, how do I do
the
that?
good question. I don't
Wait, I think your guest yeah, here we go. I think, yeah. Should be. Why don't you push on see if you can share something right now? You should be able to.
Okay.
Add to the scene 1 second. Oh, here we go. There we go.
You can see the chart on the screen there?
Absolutely.
Okay, good to know.
It's actually really good formatting. All right, we got some people. Okay, let me set the stage. All right, guys, we are going to be doing some deep dive today into the Bitcoin quantile model that was created by PlanC and others. This concept of quantile stuff, PlanC will go over it. I'm very excited about it. You know, I would say there's a group of us kind of quants online. You know, starting with the original discoverer of the power law, which is Giovanni. And we have in this group, we have Sina, PlanC, myself, Matthew Mazinski, APSK32, and we have Svensson with. So all these people are sort of, all of us have, you know, at some point in the last year spent some, and Stephen Perrinode, I'm sorry, last but not least. So all of us have kind of a quantitative bent. Some of us are coming in from the physics world, Giovanni and Stephen Perrinode. Others more from the applied math world, and some of us from the engineering world. And some of us just we're good with numbers. And you know, I think Matthew would kind of put himself in that category. So without trying to like say who discovered what, I will say this is a super interesting area, and especially interesting right now because there's a lot of talk about whether we're at a 4-year cycle high, whether you should sell all your Bitcoin because we're going to go into a 18-month bear market. And so we're going to cover all these topics with PlanC. So again, PlanC, thanks for doing the video. And let's set the stage. What's the genesis for this quantile model?
Yeah, absolutely. Yeah, we can definitely get into it. First of all, I just want to say I appreciate having me on. You know, it's always nice to chat and stuff. So looking forward to this call for sure. Yeah, and I put myself in a similar category as Matthew, essentially someone that's always been good with numbers. I never, you know, went to school for an extended period of time. There was never anything at the time when I was in my early 20s that really drew my interest in school. And so that was the main reason why I ended up starting businesses and things. But I definitely have a mathematical mind. And looking back, you know, was something interesting enough, I could have seen myself pursuing math or something along those lines, even physics. You know, I always excelled all throughout, you know, high school and stuff with math. So, but yeah, with Bitcoin, I mean, just having Bitcoin as the thing we're, you know, kind of dissecting here, there's endless unique and interesting analysis that can be done. And the group you laid out, that is the core.
And before you get into this, something I've never heard is, when did you start getting interested in Bitcoin?
Yeah, I actually, so yeah, I guess the genesis story for me, I'll keep it brief, but I had a wellness center in Canada at the time that I started with a business partner. And it was actually one of the employees that bought 1 Bitcoin when Bitcoin was at 2,000 Canadian. And during the end stages of the run up during 2017, it was around early December, he started telling me, "Oh, I'm just about to hit my target," because what he wanted to sell at 20,000 Canadian, so it would be a 10x for him in Canadian dollars, right? We went a bit higher in US, but in Canadian dollars, the 10x is kind of what his target was. So he's excited, telling me, I'm getting close to my 10x target. And I started looking at, the Bitcoin price out of curiosity to kind of, I was excited for him, right? And so I'm like, okay, well, that's cool. Let's see, you're getting close. Let's see when you hit it. And every day there was a period, I remember it very well now. I'm at my business and I'm looking at the price, and it seems like the thing's going up every few hours. I'm like, what is going on here? It was just the timing of it and the fact that my interest, because I'm so focused on my business up until that point. And so I was head in the sand. I wasn't really paying attention to markets. And it was just the luck of the draw that the person that was working for me happened to have this interest. And I happened to kind of at that moment, right at the right timing, show that interest. And it got enough interest in me that I basically was like, okay, what's happening here? And then me and my business partner ended up just going crazy. I like to research things. So I spent like all of 2018 looking into all the altcoins, of course, right? Like just going through this kind of, trial by fire with altcoins and going through all the different altcoins. This was during the, what do they call them? The launch of the ICOs. This was the ICO boom, right? So this whole craziness, 2018 was just nuts. And so I went through that, and the whole time though, I was still listening to Bitcoin podcasts and trying to understand the space. And it took me a good 2 years, if I'm being honest, to fully understand that I wanted to be in Bitcoin. And I was lucky that I only put a relatively small percentage of my money into alts. I got burned on a project called EOS. That's a whole nother story. I mean, I think, but it was a good lesson. And the fact was, it was a smaller percentage. And then I was fortunate enough that it finally clicked with me that I wanted to be in Bitcoin. And then COVID crash happened, and I essentially went all in on Bitcoin. I pretty much put everything into Bitcoin that I had access to at the time. And I basically held that ever since. I did buy a bit more during the FTX lows. I bought a bit more with what I could. And I haven't sold any Bitcoin ever. I do have regrets, and I did make mistakes. Like the Cell token for the Celsius platform, I put my Bitcoin on Celsius and basically bought a little bit. I converted a little. Actually, no, I did sell Bitcoin technically because I did convert a little bit to Cell token. That token went up 300x during the last cycle. It was one of the best performing tokens. I rode that up all the way and all the way down, which was another great lesson and experience. But other than that, I basically have held everything in Bitcoin.
Did you get caught in the Celsius? Did you get your Bitcoin off of Celsius?
I did get it off. All the Cell tokens I left on the platform, which didn't matter. I mean, I bought Cell token at such a low price that I basically broke even on it. I wrote it up, but it was a great lesson because at one point it was worth 7 figures and I didn't sell it. And so it was a great lesson in unrealized gains and understanding liquidity. Because to be completely honest, my investment experience before crypto is essentially zero. So it's been a very steep learning curve, and I've put a lot of time.
You and I have this in common because I had a considerable amount of money on Celsius, and I was very lucky that I remember they changed their terms of service. I can't remember what year it was. I want to say 2021, but
2021.
Things were still going okay, and they just changed their terms of service. And for some reason, I actually read those terms of service, and I was like, whoa.
Yeah, you're one of the only people that did. And the thing that's tricky about, so I did get all my Bitcoin off. So I realized I didn't want to be all in on one place. And it wasn't, I didn't even think there was anything wrong with Celsius. It was just that the overall market was kind of crashing and unstable. And I'm like, this is nuts. I have everything on this one platform. So I left the Cell tokens there, which was worth a lot of money at the time, pulled all my Bitcoin off. And so I was fortunate enough to do that. But it was people don't understand, and I don't want to spend too much time on Celsius in last cycle because this is in the past now. But people don't understand, with Celsius specifically, it was a black box, and everything appeared to be going great on the surface. And there was so much euphoria last cycle. And I mean, the CEO went to jail for 10 years. He was lying to the community, so no one knew what was really going on. But they had at one point over 1 million people deposited on the app. They had, I think it was 16 or something billion dollars. They were one of the largest holders of Ethereum. I think they had 1% of the Ethereum supply. So it appeared on the surface like everything was amazing, right? But
I
anyway,
mean, a million is amazing because, probably I estimate that there's, and we could talk about this, but I estimate there's maybe 50 million people who have any kind of Bitcoin at all. Probably there's probably something like 15 million people have a million sats. 15. So they
yeah.
had at a million, they must have had 10% of the market. You know what I mean?
Oh, it was also higher net worth. Like their average, the amount. Did you know the government of Bhutan? They were on Bitcoin, and actually they didn't get their Bitcoin off in time. Or no, they got it off, but they were stuck in the clawback thing. But the government of Bhutan, all the Bitcoin they were mining, they had a percentage of it on Celsius earning yield, and they got stuck.
No.
They were one of the largest clawback creditors. So it was a whole thing. I mean. Anyways, it's
okay. So you had obviously not at that point in the thing. A few people. Giovanni had published stuff on the power law. Matthew Mazinskis actually was 3 months later than Giovanni.
They were close. They were close to each other, and I think Matthew was even doing his own analysis before he posted. So they probably discovered it pretty much around the exact same time, pretty much. I started getting interested in Bitcoin analysis around 2020. And after I kind of went all in on it, and since then I've actually been full-time researching it. I've been fortunate to be able to do that. And I looked into all the on-chain metrics. So I got the top tier subscription to Glassnode, and I spent about 2 years just looking through all the available on-chain metrics and everything that was available back then. I'm not a TA guy, so I don't particularly, it's not my expertise. Sometimes there's some interesting stuff with TA. I think that's okay. Some people are really good at it. I get it. Traditional markets use it. It has some value. But I tend to weight the on-chain stuff and regressions higher. And I really focus on long-term. I'm not a trader. I'm not really interested in what Bitcoin's going to do tomorrow. I think most of that is essentially just gambling. There's too many variables, and there's too much outside influence and with the news and stuff. You're really rolling the dice unless you have some inside information. Essentially, I don't think it makes sense to do short-term.
So when did you see the power law first?
Early 2024. So after spending a couple of years looking at all the other stuff, and I was looking.
Same with me.
Yeah, I had made indexes with all the indicators. I've always been interested in kind of trying to understand Bitcoin from a quantile or from a quant lens. But early 2024, I actually came across it because of Giovanni, and because of his, I don't know how to describe it, but he gets excited on X. So he was very excited at the time, and I happened to come across some of his stuff, and I basically looked into it. And right away I said, this is interesting. I could tell there was a pattern here. I think very similar to you. I mean, with your background, you probably got it right away. With me, it probably took a little bit longer. But I got it pretty fast. I'm like, okay, this is meaningful. The biggest thing for me right away when I kind of came across it with Giovanni was I'm like, okay, I see these charts on different websites with the power law, but that upper band, it's not following the pattern there. I mean, there's some sort of a diminishing return aspect to it. So I was interested in understanding the full kind of distribution of Bitcoin and seeing if there's any way to quantify more the pattern we see kind of in the upper parts of the data set. Now, the caveat with that, of course, is there's less data with that. It's, we only have so many cycles. So how do you really go about actually quantifying that? And is it worth doing?
Well, I'd say, here's the thing. You would say there is less, if you're trying to pick the absolute top, okay, I'd say there's 3 data points, right? For the absolute top.
Yeah.
But if you're talking about how much time does Bitcoin spend at these various levels, well, we have 16 years of data, almost 17.
That's a good point. It depends.
We have 17 years of data, which says how much time does Bitcoin spend at 2x the power trend? You know what I mean?
Yeah.
And the answer is not that much time.
Yeah, exactly. No, I think the good thing is, so a couple of advantages with quantile regression, right? So the reason why I specifically targeted on quantile regression, so I started posting about it actually. I created this kind of channel with it, essentially early 2014. It wasn't that far after, so it was around March of 2014 or May or something, somewhere around there.
2024, you mean?
2024, yeah, May of 2024 is when I first started posting about this quantile regression idea.
Right.
And the reason why I was gravitated to it is because you can put things in kind of like a 0 to 100 score, so to speak, and you can actually say based on which quantile how much time we've spent or how much data up until that point is above.
Which I think is like I think that's a really interesting way just to time back, to zoom out, and just sort of say, okay, if it's only going to spend 10% of its time in a certain zone, you know what I mean? You know, the chance of you actually picking the top is going to be pretty low. But you know what I mean? Like it, and so I'm not sure that, you know, any information is going to get you that absolute top. But I do think that, you know, picking the 90% or 95%, I love to get your take on kind of these numbers. But, you know, it's sort of not a science, right? But we can say with pretty high certainty is that when we go into this sort of 90% range, you know, we only tend to be there for, I think, 3 months. I don't know what's the numerical number, but it's, you know, 90 days or less, right?
Exactly. No, and I think, and again, it's not, the whole point is not to like pick the exact tops, but as a just like you DCA in, if with a percentage of your portfolio, if you want to ladder out at a certain, you say, okay, once we get above quantile 90, I'm going to start to ladder out or something in that top end, or 95, or you pick whatever you want. Right, you can ladder out different amounts of different. There's all sorts of strategies you can use, right?
Right.
But definitely, I do think it has use and value. And this is how I look at it: is okay. So I'm using hourly data. I'm using the full data set. When you break that down, I actually, so the pattern I use for the top 50% of the data is based on the top 2% of the most extreme kind of days. That doesn't sound like much, 2%. But when you actually look at the full history of the last 15 and a quarter years, because data started in July of 2010, it's actually 111 days. So 111 days of the most extreme kind of price action. Every 4 to 5 years, basically, you're talking about a month where Bitcoin essentially goes parabolic, or has historically. So
wait, you're talking about 100 days, so 3 months, right?
Yeah, but if you look at it over a period of, say, like 3 or 4 cycles, then because
right,
111 days total. But if you kind of look at, okay,
really? Okay, so it's a month. It's
essentially taking like the most extreme price action, or the most extreme euphoria we've seen.
So that would be November of 2017, probably January of 2021 or December of 2021. Those two kind of, you know.
Yeah, roughly, exactly. It's instead of just taking the top data points, I'm using about a month of data for each of the cycles. Now it equals 111 days. It's 2% of a lot of data. Now you could use 5%. There's no, it's kind of, I picked the 2% number, but it'd be interesting to also do 5% and compare. But I do think you want to take that top 10, 5, or 2%, somewhere in that range, right? Depending on how focused you are on trying to get near the peaks. But ultimately, I mean, there's a clear decay pattern that we've seen. And I'm interested in your thoughts on this, Fred, because, I mean, the thing about Bitcoin, right, is it's a network, and it's a network that's stabilizing over time. That's part of the power law. So everyone's very focused on the power law, and I totally get that, and I think it's extremely important, and I think it is the core pattern. But the decay element, I think, is also very important, and it's connected to the power law, because the decay of the top 50% of the data, if you look at power laws and growth networks as they're going through their adoption cycle, they do follow a decay pattern, right? Because the volatility is going down, the market cap's growing, the order books are getting thicker, and there's more stability ultimately in the price over time. So it doesn't mean that we can't still have these extreme deviations, but I do think the overall trend is probably going to be less deviations. Now, I mean, that's obviously debatable. And if the US dollar loses its stability, that could throw a wrench in that whole idea, right? It's dependent on the denominator, it's dependent on US dollars, right? But if the US dollar remains stable, I just listened to one of your recent interviews, and tell me if your opinion's changed, but you don't think the US dollar is going to break anytime soon, right? I know it can break overnight, like currencies can break overnight, but I think over the next 10 years, at least we should see enough stability in US dollars to retain these sorts of patterns, personally.
So, I mean, here's what I would say in the argument of stability. Okay, number one, we have the observed standard deviation, right? The measured standard deviation in log space has gone from 0.4 to 0.3 to 0.2, right?
Yeah.
So, and that's sort of like since 2017. The 2017, it was around 0.4. Then, 2020, 2021, it was about 0.3. Now it's more like 0.2, and I think that, 0.3 means that as one standard deviation is we double, right? And when we were talking about it, a year ago, we were always thinking, well, it's if you look at the broader data, since say 2015 or 16, as a general rule of thumb, you could sort of say, well, the model is Bitcoin's either going to go down by half or it's going to go up by a factor of 2. But that takes into account the higher volatility of the earlier era. Now it's less than that, right? So now I think the model is we go down by 40% or we go up by 60%. That's kind of where we are now, and that trend is pretty stable. It's going down further, right? The other thing I would say in favor of stability is the R squares are getting better, right? So if you look at the R squares measured, up until 2016, 17, they were on the 92%, 93%. Now they're kind of 95, 96%, right? So I think there's a lot of sort of statistical evidence that we're getting more stable in Bitcoin.
Right. No, I definitely agree. Can you see my chart?
Yeah. No, I can't see it.
You can't see it. Okay, let me
upload it to the chart here.
I can.
Okay, one second.
I should be able to share it here. Just.
I'm only seeing you. I'm not seeing the chart. I was seeing the chart. So why don't you add the chart again? Oh wait. Okay, add to the scene. Okay. All right. Let's go. Okay, now I see. You have to double click on the chart.
I just.
Okay, now we're good.
No, I just had it up. What did I do with it?
Okay.
Oh shoot, sorry. Okay, I'll grab it here. Shoot, I had it.
Okay.
Yeah, it's right here. I just have to upload it. Okay, this one. Oops. Yeah, this is the one right here. So you can see that, eh?
Yeah.
So yeah, what you were saying before. So the R squared 100% going up. Completely agree with you. We're spending more time around the kind of middle quantiles, and that's increasing the R squared. But this is looking at the ratios of price versus the median quantile regression, so the 50th quantile over the whole history, right? And
okay, so what is it? Oh, sorry, slow down.
Yeah, sure.
What is this ratio?
The left side is just showing ratios. Okay. And so, we have time and we have ratios. So the ratio that we're showing on the chart here is the price in US dollars versus the 50th quantile US dollar value.
Oh, this is the
This is
the
multiples
of the 50th. Okay.
This is multiples above essentially the median quantile regression or the core power law trend. Yeah. So there's a clear decay pattern here. You can see that, this is the extremes of the extremes. Like back here, I'm of the same mind as you are as far as like the halvings don't affect really Bitcoin anymore. And this is the first 2 cycles. So these are all very retail driven. But you can see with the volatility back then of the thin order books, we got like 28 times above the power law core trend or quantile, 50th quantile. Then it dropped around 15 in this cycle. Then it dropped around 8. Then it dropped around 4. It's essentially been halving every time. And this is actually a stretched exponential decay pattern. It's kind of like an exponential decay or a stretched exponential decay. So there's a clear pattern here. I mean, this definitely can break, but it's even though it's only 4 data points, you could say it's.
And I do think the other thing to mention, and this is something Giovanni sort of mentioned, is these bubbles do look like exponentials on the way up and on the way down, right?
Yeah.
We're going up, I don't know, 3% a day, for the way up, and we're going 3% a day down on the way down, something like that. And I don't know if those are the exact numbers, but it's constant. Once we go into a bubble mode, we're bubbling up at a constant rate, and then we're bubbling down at a constant rate, right?
Yeah, like an equal rate. I know it's been so cyclical with the up until this point where it takes like a full year pretty much to like get down to the bottom capitulation and everything.
Mm-hmm.
But yeah, I don't know. Like, so that last chart I showed with the ratios. So, looking at something like that makes me want to be like, okay, I'm going to try and do as good a fit as possible, right? And just following what the data says and the math says, and try to quantify if that pattern continues, or at least like ballpark continues, right? We're going to have deviations from it, but it's actually a really good fit. The power law is a great fit, of course, but this decay, stretched exponential decay pattern, which an exponential decay is just continuous decay rate. I mean, these things, but I'm just saying this for the audience.
One of the things I'm wondering here, just looking at your model, have you done a version of this chart that we were looking at where the time is logarithmic?
So this is log time. So basically, what I do is I start with the log of price versus the log of hours since the Genesis block.
No, but you're doing equal. The time is actually.
I'm just displaying it linearly though, but it's actually the data behind this is log.
Right, but I'm just saying, is it log? No.
Yeah, it is. Yeah, it is. So
those increments are not shrinking. In a log version, the x-axis would have shrinking dates.
No, absolutely, but I'm displaying it. So the data itself, right? So the actual math behind it, I calculate the math and all the regressions. They're done log of price.
No, I get that. I understand that. I'm just saying, I would like to see this not in a rainbow fashion, but in more of a log. Where
displayed in log. You're saying? Displayed.
Yeah, exactly.
Well, displayed in log, it's going to be basically a straight line, right? It's not going to be
right. That's what I'm saying. Do you have a? I was just question. It's a question, really. Do you have a version of this?
Not with the Quantile, no, because the reason why is because it's essentially the same math and it'll give all the same targets. But the only
I understand. The only reason is I tend to like looking at the world more in log way.
Yeah, okay, yeah, that makes sense then. So
I'm just more of a log guy. I think Bitcoin is a log phenomenon, right?
Yeah, I agree with you. I do agree with you, and I think that I do think you're the exception though. And the reason why is I think most people they just perceive time linearly, like that's their. But your ability to see the world in log is probably one of your strengths, because most people, they don't have that math mind to that degree, and for them they just perceive time linearly, and so it's just more intuitive to see it in this way. But I agree with you. There's a lot of value in both ways of displaying the data, and I can definitely display this log.
I definitely would like to also see this graph in log.
Yeah,
that's it. I love this graph. I love the presentation you did. I love the quantiles, but I just would also like to see a version of this in log.
Yeah, I can definitely create that. It wouldn't be that hard, honestly, to do that. But yeah, definitely. Like, so, I mean, essentially with this model, I mean, it depends on what people want to look at, right? You can look at the 50th quantile, and it's basically saying about a 4.5x over the next 5 years, right? So like 4.5x over 5 years. That upper, it just depends on when we get to those upper quantiles and how far we go.
Yeah,
right? There's some decent targets there, but it's nothing crazy. Like all these targets are very achievable, especially how much Bitcoin is lagging gold. And there's just lots of reasons. And I'm also like in the extended cycle, high probability of extended cycle camp, because for me, there's no signs of over leverage in the system, especially after that wipeout we just had. Right. And also that FTX Luna collapse and bear market we went through, that was a full flush out of all the shenanigans from last cycle. And there's a strong incentive now for people not to do these sorts of illegal things. So I think the leverage in the system is way less now, and just
way less than it was
last cycle,
a month ago, right?
Well, way less than it was a month ago, but way less than it was last bull market, like way less. I'm not seeing the leverage, like, because last cycle we had all these lending platforms where there was tons of alt lending and Bitcoin lending. I think there was just more leverage in the overall market, right? And there's a lot more euphoria. This cycle, because of the bear market flush that we had with FTX and Luna, and then this recent flush, I feel like there's a low amount of leverage overall. Maybe I'm missing something there. Maybe there is still leverage in certain pockets, but I think in net it's definitely less.
Well, look, that's a really good point. We should spend a little bit of time on that. So what's changed? What's changed is I think you've got the ETF buyers who are very, generally lower. First of all, they don't use leverage, most of them. Okay. An ETF buyer is buying it with a small percentage of their cash flow. So they're not, they're not generally levered.
Right.
And yes, there's quite a bit of there's quite a bit of options in the activity in the options, but that kind of leverage does not cause panic panic sells, forced sells. That kind of leverage is like, well, your options just expire worthless. Sorry, you know. But there does seem to be more an increase, especially in, I would say since the beginning of this year, in things like Hyperliquid and Aster, and Coinbase is now doing 50 times leverage, right?
Right.
So it seems like in the degen world, the leverage actually is going up. I just think that, the question is, how big is the degen world versus the institutional buying and Sailor and everything else,
Right. Yeah, like there's definitely still leverage. The leverage that's individual leverage though, and those people will get wiped out and liquidated. They're kind of, what I mean more is like systemic leverage between companies and within the actual
Yeah,
ecosystem.
I don't think there's not a lot of FTXs out there.
That's what
Right?
I'm more referring to.
There's
Like,
no
yeah,
3ACs, there's no FTXs,
exactly. Yeah, and there's
there's
a
no
strong,
Grayscale,
yeah, yeah,
MicroStrategy is not going to be dumping all its Bitcoin because
exactly.
we
Yeah,
went
there's
down
no
the
one
dark.
like Luna that's going to dump all these Bitcoin. Like, there's nothing systemic, and there's also a strong incentive now, or high incentive, not to do straight up very illegal stuff. People have been made an example of. It was a bit of a gray zone. People got euphoric last cycle, and they did things that they probably wouldn't have done because they thought they were going to get away with it. So
Yeah.
that window's done. That door's been closed. Like, now people understand you got to follow, go by the book. And individuals will leverage up and get liquidated. But overall,
Also, that I think there was a lot of this, like you mentioned Celsius, right? So they had this cell token, right?
yeah.
That cell token, they were taking people's Bitcoin and they were
And
buying
buying,
cell
sell,
tokens.
and no one knew that. Nobody knew that, and that's why the
We didn't
token
know
pumped
that. And then
300x. Yeah,
FTX had their stable coin, or I think it was
FTT
FTT,
FTT token, same thing.
and
They
they were
were,
leveraging up that and
yeah,
propping that up to use as balance sheet towards borrowing more Solana. And there was a lot of games like that, which I don't think are present today.
exactly. And so it's basically companies, big companies, exchanges printing essentially money with their own token,
Right.
and propping it up
We
and
don't have that.
supporting it with user funds. Like, that
Right.
stuff's not occurring now. People know they can't
Right.
do that. So
Right.
that was adding a lot of systemic risk and leverage for like a black swan collapse. So
Right.
I guess what I'm saying overall is, if you look at this bottom quantile band, which we spend 20% of the time in historically, you can see we never actually got, I don't know if you can see my cursor.
Yeah,
But
we can. Yeah.
so this was during the bear market lows of 2018. We actually never got into that quantile. We basically found support there. It was the COVID crash that brought us into that. So essentially a black swan, right? You could say, that brought us
Right.
into that band. And then during, the Luna and FTX, which was kind of a black swan, it was a known risk, but I think it was mostly unknown to what degree and stuff. So my point is, if we were to go in a bear market, say the 4-year cycle's right, which I personally lean against it. I'm kind of on the other side, but say it is correct and we do go into a bear market now. I just don't see how we go into a deep bear market. There's so much positive news and adoption, the ETFs, the treasury companies, and like, what is the systemic leverage that's going to bring us way down to here? So, okay, so we go into a bear market, it takes us 9 months or a year to find a floor. Well, that would bring us to this range. Say we only go to the top of the band, say we're like right here. I mean, it's basically around where we've been building support for over a year. The 1-year moving average right now for Bitcoin is at 100,000, right? So we've built a lot of support, basically between 100 and 120K, you could say. And okay, so I don't think we go down to this level. I think we go more in this range.
Right.
If we go into a bear market from here, right, we'll probably hit one of these. But I'm actually, my base case is that we don't go into a bear market from here, and we probably keep grinding up, and maybe we end up reaching, something more along the lines of this range, right?
Yeah. But it takes us a year to get there, is what you're
So
saying.
a year or 2 years, or maybe even as much as 3 to get to that top band, and we just kind of grind up, and it's boring, and people are complaining the whole way, but also the reality is,
Right.
as soon as January comes, or as soon as next year comes, so quarter one of next year,
Okay.
if we're still above 100,000 or 120,000, hopefully above 130 or well above it, if we're anywhere, where we're kind of sideways still or grinding up, I mean, anyone that's sold, right? So I guess it's a talking point for you is, to what degree is the sell pressure right now that's happening today a result of people thinking they're taking profits because of the 4-year cycle and thinking they can get back in lower? They're like, probably last month, this month, even next month in December, we're going to see people selling a percentage of their coins. I've done some polls on X, and about half the people still believe in the 4-year cycle. Thousands of people did the polls, and about half the people, right? So
I've run similar polls, and that's what I get. And
it's about 50%,
it's
right?
actually a lot of people whose opinion I respect do think that the cycle is going to happen.
Yeah. So what do you think? So like, we've seen a lot of sell pressure between 100 and 100, 30,000, 120 or whatever. So I like, a lot of it's OGs that got in $1,000 or less. Think about it. If you got in $1,000 or less, you're up 100x. So people are going to take some amount of profits on that. And that's been happening the whole year. You have these old coins coming back in, they're selling, but that brings up the cost basis of the whole network, and that makes the market cap a little more legitimate, right? Anytime a coin that was bought below 100 or below 1,000 is repriced at 100K, that's bringing up and actually justifying the $2 trillion market cap. So it's not a bad thing. We're stabilizing, and we're basically repricing these old coins. Plus, on top of that, you have basically people that believe in the 4-year cycle taking their profits slowly. Come January, February, March of next year, those people are going to want to get back in the market. They don't want to miss the long-term Bitcoin move to $1 million, right? And so that's actually going to become a headwind. Right now it's a tailwind, or sorry, a headwind. Right now it's a headwind. It'll become a tailwind, right? So right now there's an amount of a headwind that is sell pressure from the 4-year cycle believers. Next year, assuming we're still kind of crab crawling or moving up, they're going to FOMO back in, and that becomes a tailwind. So that's actually a bullish scenario come next year. We just got to get through this 4-year cycle narrative. Once that's out of the system, I think it's actually going to be really healthy for Bitcoin, and we're most likely going to follow a completely different pattern. And you've discussed this. Like, I've heard you talk about this. This potential of a multi-year run, the ETFs being a factor. Like, what's your overall take? Like, what do you think controls the cycle for Bitcoin now? Is it the business cycle? Is it liquidity, global liquidity? Like, if you had to pick one or two things that like actually will determine the cycle length, what would you say those are?
Well, I think, there's this really great show called The Men Who Built America, and they talk about bear markets, and they say the necessary condition for bear markets is that you absolutely don't see them coming. And it's really, they come when everybody thinks there's no bear market. You know what I mean? So I feel like, right now, the 50% of people who think there's a bear market, that's a pretty good protection against bear markets, because most bear markets, I mean, literally everybody says right before the bear market that there will be no bear market ever. And it's not just one or two people saying that, but that's the general belief. You know what I mean? And I just remember, like, two bear markets that I can kind of remember and pinpoint to a specific conversations. One is the bear market of the NASDAQ, and in 2000. I definitely remember having this conversation with an absolutely brilliant guy who, flew around the world in his private jet and was kind of never wrong, and was worth hundreds of millions of dollars. And he told me, literally, like, in February of 2000, he's like, "Fred, you realize that there will never ever be a recession after this. Like, we're done with them." And I was like, wow. And so, he didn't see it coming. And then earlier than that, I would say, I remember Japan in 1990, and I can tell you that in December of 89, I was in Tokyo, and it felt like the absolute the chance of the Nikkei reversing at 40,000 seemed impossible. Like it seemed like they were on such an absolute tear. They were going to own the entire world. They're going to buy California like just with pocket change. You know what I mean? And so I think what the thing that's going to cause a bear market is for everybody to completely believe Bitcoin's invincible and we'll go to the moon forever. And that has to be a widespread belief. I think we had that widespread belief in 2017. People were really literally thinking it was unbelievable. We were going to change venture capital. Everybody was going to raise money with ICOs. It was the end of the capital markets, the end of the stock market. We were just going to this. And obviously we weren't ready for it.
Yeah.
I think in 2020, 21, we had similar things where, Sam Bankman-Fried was on the, front page of Forbes saying the new JP Morgan, right? And, we forget how bullish the world had gotten, right? Like this guy has just made $1 billion last week. You know what I mean?
Oh, it was nuts. I mean,
It was nuts. I mean,
the mainstream commercials, the sponsoring of stadiums, right? We had like FTX sponsoring like stadiums, and we had Crypto.com sponsoring stadiums. Tom Brady was endorsing.
Right.
It was so different than it is now. And I agree with what you said. Like I would say 50% at least of people right now believe we're going into a bear market within months. We're headed in that direction, and so it's just so different. You can look at the fear and greed index. You can look at these different metrics, but
I think right now we're in a perfect scenario for a bull market because bull markets are done by climbing walls of worry.
I was just going to say the same thing. Like climbing the walls of worry.
People say it's overvalued. The S&P 500 can't go higher, and yet, of course, it does. Amazon's overpriced. Well, it's going to be more overpriced. You know what I mean? So, I think that in general, I don't feel like the euphoria is there for one of these things. Now, I think if you said what's going to cause the next bull market, the bear market, I will say first we have to have a complete euphoria in a bull market.
Right.
We have to have this general feel where everybody's doubling down and taking loans, mortgaging out their houses, taking massive loans. Everybody's completely convinced that the market's going to go higher, right? And my having traded all these different markets, from Japan to equities and everything, over very long, many decades, I don't see that euphoria at all right now.
Yeah, I agree.
So I think we're, that euphoria may take 5 years to really develop again. We don't know, or it could happen in 3 months.
It depends on the rate. It's also about the rate of that euphoric, like how euphoric people get over what time span. So there's definitely a rate of effect there with the speed of it. The interesting thing, two quick questions for you, interesting topics. One is, I've seen some different charts on this, but you can see the pattern this cycle is quite different. Sminson's done some very interesting analysis on this. I don't know if you've seen it, but since the 16K low, Bitcoin has, over the last 3 years, has actually followed an exponential growth pattern. And it's a 0.93 R squared. It's within this band of essentially a channel of exponential growth. People saying like, we've gone from 16K to 126K. So it's not like a small move over 3 years, but it feels like a small move because we spent so much time consolidating at these different levels. Mm-hmm. And it's all about expectations. Everyone's expectations are 200,000 today. So, or Q4, you could say, or whatever. So relative to expectations, people feel like Bitcoin's underperformed, but it's been in an exponential growth pattern for 3 years. Yeah. And if you look at all the previous cycles, we had this parabola tops, and this has just been a stair step up, right? And so this cycle does truly feel like it's a different. We've hit.
Well, it's completely different because of its length already. Look, all the other cycles have been a year or less, right? I mean, let's just say about a year, right? 2013, and that thing started in December of 2012, right? It ended in
December of 2013.
Yeah.
It was exactly a year. Yeah.
Yeah. So it was a year, right? Then the 2017 cycle, you could sort of say it
18,
started
18
in
months, 18 months or something.
it may be 18 months, but really, look, I mean, really it was the year, it was kind of from November to November of 2017.
Right.
Most of it, right?
Another year. Yeah.
Yeah, it's about a year, The 2020-21 cycle was, most of it was done
It was
in the year.
fast. It was
What?
fast because that one was quick because of the printing during COVID, right?
Yeah.
We went from the COVID lows to the April 2021 we had our first peak. That was essentially a year, I guess you could say, because March 2020.
A year and a half. But I mean, like, we've been climbing now, since mid 2023, we've been on this tear, right? I mean, you could say from January 2023, right? So it's been over 2.5 years right now.
Yeah, it's closing in on 3 years.
We're closing in on 3 years. So this is completely different from any other cycle in terms of its length. Again, I would sort of say it'd be interesting to look at these things in log space a little bit. But look, I just am not. I really, I told Giovanni, I said, when he got very excited about all these cycle theories and everything. My point is, let's just take the limitations of the power law. What is it? It's not really great for telling you what the world's going to look like 3 months from now, really. But it's very good for telling you what the world's going to look like 5 years from now, right? And I think if you looked at the power law in 2016, it would have predicted kind of where we are right now, right? So remarkably, right? Because Bitcoin was at 700 back then, and it would be like, yeah, Bitcoin's going to be at 100,000 in 2026. That would have been an amazing prediction, like if somebody said, wait a second, the markets, you're going to go up 100x in the next decade. Most people say, well, that's an amazing prediction if that's true, but that did end up being true, right? So I'd say it has very high predictive power over longer periods. Over shorter periods, I don't know. And we've had these 3 bull markets, and for us to kind of interpret too much into these bull markets, I wouldn't try to get it too much. I just feel like that's where you're going to get in trouble. That's my opinion. I think that, I feel like the power law is so amazing for what it actually does predict. I think we have to recognize the limitations of it.
Absolutely. And one of the things, a couple things there, like one is, okay, people say like these ranges are too wide, but they have to understand these ranges. I mean, it's crazy when you think about it, because we're talking about 5 years into the future, 10 years into the future.
Yeah.
I mean, Giovanni came across the power law and saw it in 2018. So it's we're coming up now on 8 years of observing this pattern, and the predictions back then have held up, right? The ranges held up, and so 8 years in the past, like you said, predicting these ranges, and even further potentially, but at least 8 years. Right. And so another 8 years into the future, like these ranges are significant, because to be able to kind of see where we'll be at those points. And it's that adoption. It's showing kind of like it's everything together. It's the network in all aspects. It's the network and the adoption and the math behind that, and just that pattern, right? So I like the Quantile lens because it's cycle length agnostic. So with the Quantile model, I mean, it absolutely has no
well, for example, when Giovanni, I was talking to him about, I don't know, maybe 2 months ago, and he was like, there's no possibility that we have a bull market past November. And I was like, what do you mean no possibility? Like, and he's like, no, I totally. So he puts as much value in his, T reading of the cycles as he does in the power law, which we've
had.
I mean, the power law is telling you something very strong.
They're very independent, in my opinion. So this is something me and him have butted heads on, and he's not here to defend himself, so it's not fair for me to bash him or anything. But this is something we've definitely argued about online and offline.
Right.
And I've always been in the camp of you have to keep these things separate. So the Quantile model is cycle length agnostic, and the power. So for me, I rank like, so the cycle, the cycle, we have a few data points. I don't get it. Like if someone flipped a coin a couple times and got heads, you're not going to say it always has to be heads now. Like we've had these 4-year cycles. Okay. There's been a couple of them, but to think it can extend to 5 or 6 years one time or something different happen. It's just, anyways.
There's a lot of mythology with Bitcoin, right? People, and we saw this with the Plan B stuff, right? There's this thing about scarcity and stock to flow of gold and silver, and the real world doesn't work like that, right? Now, I think with the power law, we have this. The story is really great, which is we have this narrative of people that are experiencing Bitcoin, discovering Bitcoin. And Bitcoin works for them as an asset, right? They want something that's self-sovereign. They want somewhere that they can put their savings worldwide that's outside their banking system of their country. And we know that the adoption of Bitcoin, the number of addresses and stuff, is forming a very strong power law. 98% R squared, right? And it independent of bull markets or bear markets, right? It's very kind of snakes along. It's not even, there isn't these kind of peaks. The peaks that you see in the Quantile model, it'd be interesting actually if you did one of these Quantile models. You should try one for the addresses.
Yeah, you can definitely do it with other things.
But I'm guessing that you see a completely different performance of the Quantile model for addresses. Like,
right.
I think that basically you don't see this sort of exponential bubbles for these addresses.
Yeah, the other lenses, like looking at addresses and stuff, is showing more the underlying story, which is this right. Adoption cycle, this adoption curve, right? So the interesting thing is Bitcoin's going through its network adoption curve overall, but every individual is also going through their own adoption curve. Right. So a lot of people put their, they'll put a little bit in, maybe they'll learn a bit more, they'll put a bit more in. So everyone is deciding over time how much they want to allocate to Bitcoin. Of course, everyone's going to be different, but everyone's going through their, say one person it's 10%, another person it's 50%. Well, they're still going through an adoption curve to get to their comfort, the ultimate end of what they want to be allocated.
And those guys that do get conviction start spreading it more to their friends and family.
Yes, so it's a natural process of telling.
It takes a year before you're comfortable enough with your own Bitcoining before you tell your dad about Bitcoin.
You got to feel confident. Yeah, especially since there has been scams and things in the space. So people got to feel pretty confident now before they recommend anything or talk to their friends. It's not a social media app. You've started all different. You've gone through the process of starting all sorts of different companies. And it's different when someone just has to sign up as a user versus allocate, years of their hard work or whatever to something. So
yeah, I feel like look, Bitcoin does not sell itself like the way that ChatGPT sells itself. You put an average user in front of ChatGPT, you say, "Have fun, see you in an hour." They come back an hour later and they're like, "This thing is amazing." But Bitcoin is not that, right? You say, "Here's Bitcoin, have fun." You can do a transaction. You have to store these words, and it takes you 10 minutes to do a transaction. People are like, "I don't get it." That's generally what happens, and that's been the same way since the beginning, right? It's just sort of like, it's a long educational process. I think
it's going to be interesting to see. I think I might have got this from you. I think you might have mentioned this on a podcast, but I do think that AI in 5 years from now, when it's like really sophisticated, is going to orange pill a ton of people. Because the AI just looks at the data. There shouldn't be, as long as they don't implement sort of, some sort of bias into it for the fiat system. I don't know if they would do something like that, but assuming AI remains unbiased, if it's just looking at all these mathematical patterns and the adoption and just looking at all the data available online and everything, and I'm assuming it'll pull from websites like the stuff, when you've created, things like this, the AI is going to start, recommending Bitcoin to people, and people can have conversations. They can ask the questions they don't feel comfortable asking their friends and family. They can ask the AI, and so maybe that's wishful thinking, but I do think, it's going to be
Oh, I
faster.
think that's going to happen more and more. Look, people are asking AI for romantic advice. You know what I mean?
Yeah. So why not financial advice, right?
So yeah, so
Yeah.
they're asking, hey, I just met Johnny, and he didn't call me back after 3 days. What does that mean?
Right. Right.
So they get to go. Uncle Bill died and left me $100,000. Where should I put it? I definitely think that this is where we're headed, right? And I do think that's probably going to be, of all the reasons why I think AI is super bullish for Bitcoin is that, and all that
Right.
stuff happening. So I think the narrative to me of the cycles is, it kind of made a little sense, I would say, up until maybe 2017, right?
Yeah.
So like, even when, I remember very well the 2016 halving, and it was a snoozer.
It was one of the only narratives back then, because the market was completely retail, and the halving was a massive event because there wasn't any other real big news. Now we have
Right.
all these other, countries and corporations making announcements and stuff. So the halving is just another announcement, and it's relatively small compared to the ETFs and these other things. And so,
And
yeah.
I also think if you look at your quantile model thing, and you look at, you sort of say, okay, what's the chance that we go down? Well, I say, in all of the other bull markets, we've entered the red zone, the pink zone, right? And then we've entered the light gray zone. We're not even in the pink zone. So we're going to go down without even entering the speculative zone. Seems kind of crazy.
Yeah, we only poked very, very briefly. We essentially didn't really even enter the 80th quantile and above, which is the red is between 80 and 95. And so we only went in there for a very brief period. So it seems like we've just been bouncing around between essentially the 50th and 80th quantile now for quite a while. So and the interesting thing is, and that's kind of how the model works in a way, is some of the when we were in the 80th quantile, now we're in the 50th, but it's similar price range. And so because more time has passed, the quantile, we've kind of cooled off, you could say, but the price is not that much less than it was when we were actually in the 70s and 80s, because that was a year ago, right? And so over time, everything kind of ticks up with the patterns. And so just going sideways, you essentially cool off what quantile you're at, and there's more reason to think things can extend. But I guess another question for you is just with gold. So relative to gold, and I know you have some models with this as well.
You should also do a quantile model for gold, by the way.
I really want to. A lot of people are asking for that, and you have on your website also some really good tools for that. Yeah. And I know you were saying, I heard you say this actually on a Spaces. You were saying we're basically bottoming out versus Bitcoin versus gold. Like we're at the bottom. Like with Bitcoin USD, we're kind of in the middle of the range. Yeah. But versus gold, we're essentially bottoming out. Like we're probably at the lowest quantile. Yeah, what are we at? What's the multiple? Oh, you got it upside down.
Four times trend right now.
Yeah, so it's kind of at historic lows versus gold. And yeah. Gold's obviously had a major tear, but do you think, like, what degree do you think when the gold rally ends, right? Whenever it does end, to what degree do you think there'll actually be inflows into Bitcoin directly, allocating from gold? Like, do you put them under a bucket where if it's store of value and it's a global store of value, is even a few percentage of that gold going to actually flow to Bitcoin? And what impact?
Honestly, I think the people buying gold right now
it's just nation states. It's just nation states.
I think it's China and Russia. Well, and that's what I think.
Okay.
And I think it's China and Russia and a few really stupid retail people.
Right.
I think there's a few momentum players who have no conviction whatsoever, who are just trying to piggyback off that trade.
Well, right? we're seeing those signals, like the signals you talked about with Bitcoin that we're not seeing as far as euphoria. We're seeing it in gold. Like you're seeing people lining up around the block in some videos for gold. Like these are retail that are literally foaming in at the peak. Now they're small buyers, right? They're standing outside a building waiting for hours to buy some gold. They're small buyers. They're obviously not connected and buying large quantities, but in aggregate, it's something, and it's actually more of an indicator that gold is probably getting close to a peak.
I think gold. Look, I think the two things are independent. I don't think the money. I think very little of the gold money is going to go into Bitcoin, because I think with a few exceptions, Larry Lepard is one of them, right? most of these gold bugs have not been able to transition or even appreciate Bitcoin, right?
Right.
Even they just don't. They don't like it.
And they've been in gold for so long, and they're all obviously now they're happy with gold's performance recently.
Right.
So it's probably given them even more conviction to hold gold longer term, because they're like, gold's actually performing now. Why would I take the risk of putting in something else? So actually, that's a good point. And if it is like mainly driven by China and Russia, which it does seem to be based on some charts I've seen people posting, you know, that's actually an argument that the bull market for gold could keep going, because these nation states, you know, they can just print money and buy more gold. Like there's not really a limit on what they can accumulate, and they don't necessarily, they're not as price sensitive, right? They just, you know, they're allocating such large amounts. So at some point, the gold rally will
I just don't see. Look, the way I see it is Bitcoin's going to go up. The fuel for Bitcoin is mainly going to be, first of all, it's going to be stocks, because you know. Stocks are the majority of people's portfolio. It's 60% of their portfolio or more is stocks. And so, you know, that's enormous. I think real estate is enormous. And there's, you know, all these people who are over allocated towards real estate. And then I think, you know, bonds, in particular cash, short-term bonds, you know, as interest rates go down, I think there's going to be a ton of money that's going to be allocated to Bitcoin. So I don't see so much of it coming from gold. I don't think there's like this sell gold, buy Bitcoin trade. I don't see it.
Right.
But I think, and I just think that there's so much of the just general you know, move a percentage of my money into Bitcoin, because actually it has a future. And, you know,
right. So it's more just so the main driver is essentially more vehicles to get exposure to Bitcoin over time. Like we're seeing more vehicles in various ways. So people are just going to naturally have exposure to Bitcoin, just through retirement funds, you know, buying the S&P eventually, things like this. There's just going to be these inflows, and it's just a natural adoption.
Well, the way I look at it is this: is like the strongest argument for Bitcoin is the power law. That's the strongest argument. You know, I made a little sort of ingest a flow chart, which is, okay, number one, do historical performance metrics matter? And if the answer is no, then throw a dart board at your favorite asset class. Doesn't matter, right? If they do matter, then you kind of want to be in the asset class that's done the best over the last 10 years. You know, that happens to be Bitcoin. You know, last 8 out of 10, you know, it looks like gold's going to be the best one. So it'll be 8 out of 11 years. But by far, of any asset class, this is the one that's done the best, right? Okay. So you're going to have to go at least, you know, the majority of your money should be in Bitcoin just because of that. And then I think the second thesis is, you know, are we close to running out of fuel for this rise up? And I would say, no, not at all, right? Because we have, you know, $150 trillion of global M3. We have $130 trillion of global bonds. We have $300 trillion of real estate and, you know, $150 trillion of stocks. So we've got, you know, $500 quadrillion or more of assets and growing at 7% a year. Right. We're going to get to $1 quadrillion, you know, within 15 years of paper assets, of dollar denominated assets. And so we just have so much assets out there that, you know, there's a lot of fuel. There's a lot of fuel, and there's one Bitcoin. There's 21 million coins, and some lost, but, you know, let's just, there's under 10 million coins that can be bought at any price.
Yeah.
And it's a very under-owned asset because, you know, most of the asset that, you know, institutional investors own, well, that's, you know, that's the ETFs, and that's, you know, MSTR. That's $300 billion, right? So great. You own, you know, $300 billion out of $300 trillion means that the, you know, the percentage invested is 0.1%. Right. It's a 0.1%.
And it's only, it's only $2 trillion market cap.
Yeah, it's tiny.
It's a global asset. It's a global asset.
It's a global asset, and it's just we are at the very beginning, right?
Do you think, like, because
Yeah.
you've seen a lot of different kind of like the adoption curve for different things like the internet and such.
Yeah.
Would you put Bitcoin cross the chasm already, in the process of crossing it, or before the chasm? Would you?
I think it follows a different adoption curve. It's not just pure technology.
Right. Okay, that makes sense.
Okay,
Yeah.
so the first reason I think a lot of people ask me, look, it is not comparable to the internet. It is not comparable to ChatGPT. It is not comparable to Instagram or social media.
No, I agree with you there. Like it,
You know, these
yeah.
things have a much faster adoption than Bitcoin, right?
But
And
people will post charts saying, you know, Bitcoin. I agree with what you said there, because it's obviously there's more friction to putting your money into
it's more
Bitcoin.
friction and it's more structural, right? So, you know, look, I think those things can happen quickly. And even if you go back further, like the, you know, color TV, right? You know, the automobile, you know, there's that one chart, you know, which shows, you know, Fifth Avenue in 2005, it's all horses and buggies. And in 2013, it's all automobiles, right? So, you know, 8 years later, you know, a decade later, right?
Yeah.
A decade later, you have the entire geography of New York has transformed from horses to automobiles in 1 decade.
Yeah.
So these things are fast transformations, right? Bitcoin is a little slower. It's by definition slower. It's much more complex. You know, there's all these. You know, we have to change the whole credit system, everything, the banking system, the credit system. Our system is so built on credit right now. It's a bigger change, you know, but it's going to be even more significant, right? Because it's such a bigger change. You know, the world and a Bitcoin standard is going to be completely different than the world on a fiat standard, I think.
Yeah, yeah, and to what you just said there, you said, you know, it's a slower process of adoption, but the interesting thing that comes with that is there's more moats created along the way, because of yeah, because of that integration into the system. Like that's not something. Okay, so what I'm trying to say this the best way. So with like a social media app, you can have massive, for example, with MySpace, tons of rapid growth, but then
Yeah.
a competitor can come in and steal the rapid growth. You don't have that with Bitcoin. So it's you could say it's a slower growth. There's more friction to adopt it, but the way it's integrating in the system kind of methodically over time, that's not something that can be replicated by another coin. It's just, it's a moat. Like that process of adoption.
I think, look, this is the thing stopped me from getting Bitcoin, going along Bitcoin earlier. Look, I mean, I was very well positioned to buy tons of Bitcoin in 2013. I didn't do it. It took me until 2019 before I really got it. And I think the thing that screwed me in this process was, you know, I thought of it as a tech play. You know, I thought of it as like, okay, well, Bitcoin might be MySpace. What's the Facebook? You know, this might be Yahoo. So it really is not a technology. I think, you know, it is not a technology. It's something much more fundamental than a technology. We just keep on not.
How would you define it then? If because I agree with you that it's not a technology, because that I would say that's one of the main things that got people in trouble in previous cycles, was they were focusing so heavily, like a lot of these, you know, investors and things. And I'll admit I was the same with EOS and Ethereum. I thought EOS was way faster, whatever. So people focusing too much on the speed and the technology of these assets. And not understanding, you know, the network effects and the moats created with the brand and the network. Like what is it then? Like, would you say the core element for Bitcoin, because it's not technology, right? But is it the network? Is it like, how would you define that? I guess is an interesting kind of thing. Like, what is it?
Well, I think it literally is a new money, right? So,
like, but is it the brand of Bitcoin? Like, what is its moat? Like the main moat? Because I'm completely in that camp that nothing's going to replace it at this point.
Well, look, you know, I think every other and anybody who wants to say I'm going to print my own money and you need to accept my money, that's really been the story of fiat, right? Because there's been many versions of that. You know, the British said that, like you need to accept pounds, and they tried to get India to do that. You can issue your own currency, but you have to have them be based on pounds, right? And the U.S. is sort of like, we're going to make the currency, we're going to pay for everything in U.S. dollars. The dollar is going to be used as after Bretton Woods. So, and now we're sort of seeing that reinvented with all these people saying, I'm going to create, CZ creating BNB. Well, he conveniently allocated 40% of BNB to himself, at the beginning of that experiment. So I think the moat on all these things is the launch process, right? And so because of that, I think there is, the lesson that really has happened with cryptocurrencies is none of them had a fair launch like
right.
Bitcoin.
Okay, so
none of them have that story. None of them.
So this is a good point then. So really I think Bitcoin has multiple moats, but one of them is the immaculate conception of Bitcoin, and that window is already closed. So for anyone who thinks there could be another immaculate conception and it'll be another Bitcoin, it was a moment in time. So almost the biggest moat you could say with Bitcoin was it was a moment in time where it had a perfect immaculate conception. There was an opportunity, a window. That window's passed. Bitcoin took full advantage of it, and there's no going back, essentially.
I think that's the first moat, and the second moat is it's sort of like a religion. There's only, I don't know how many major religions there are out in the world. 5. You know what I mean?
There's only a couple, 3 or 4, 5,
and they all have their unique story. For why there's 5. You know what I mean? But there's not a million religions.
Right. There's cults, but there's cults, but those are very, very small, right? And that would be like your meme and altcoins is these cults, right? And then you have
Scientology.
Scientology
is like Cardano. You know what I mean?
It's like totally.
But look, the major religions, they've had incredible longevities, right? But they haven't, at the end of the day, these are networks, and they're belief systems, and Bitcoin has the perfect DNA, has the perfect story, right? And at the end of the day, it's not about speed. It's not about, it's not about speed. It's not about features. This thing is about, where are you going to store you're some guy in Nairobi, and you don't trust the banks, and you've got a 17-year-old daughter who's going to go to school in the US, and you want to have some way of giving her money so she can survive in the US. Bitcoin solves that problem. You know what I mean? Like nothing else solves that problem. You know what I mean? Nothing else has this is likely to work 10 years from now. And, and it's also like, it needs to not change, right? So like, I know if I went into a coma and I woke up 10 years from now, I'd fire up my Bitcoin wallet. It would work. You know what I mean? It would work.
Yeah.
If I fired up my Ethereum wallet, I have no idea.
You'd have to push a bunch of upgrades, and who knows what would happen. Right?
It'd be like, you need to go to Ethereum V3. You know what I mean?
Yeah.
And by the way, so there, I think it does get it. It's like a snowball. It gets more traction as it gets bigger in size. The adoption rate's growing slowly. If you look at the adoption curve, it's if you look at the adoption rate for 1 million sats, I think the power is 2.4 or 2.5, right? Which is something like 16% growth rate, right? Annually. Now it's high. That means that, the number of Bitcoiners is going to double every 4 years, or three or 4 years, right? 4 years. But it's not like, it's not like the adoption rate for ChatGPT, right?
Yeah,
Which
exactly.
Is, 100%, 200% per year. You know what I mean? Like, it's not like that. So, it's easy to sit there and say, well, Bitcoin's doing nothing. It's not, but it's growing very consistently, very steadily.
Yeah.
And I think there's nothing out there like that, and there's nothing that's even like a proto Bitcoin. I know Kaspa thinks it's like one, but it's not.
There's nothing remotely close to
nothing
Bitcoin.
remotely close.
When you look at the hash rate and you look at the liquidity, when you factor in liquidity, hash rate, this recent liquidation cascade was another advertisement for Bitcoin. A lot of these alts went down 80, 90%. Just such thin order books. Bitcoin, it went down. Ultimately, it settled at around 10% drop. Like, it's nothing crazy, right? It had a wick down on certain exchanges more, but whatever. It was 10% pretty much. So, like, again, that gives confidence to people that want to actually put true allocation and like use it as a savings vehicle or whatever, right? So yeah, there's no competition. Like, and people are confused about that. Some people are confused about that. They think there'll be another one, Casper, whatever. It's not going to happen. Like, that ship is completely gone. And every year that goes by, there's just more and more of a moat being built around Bitcoin. And essentially, everything that people talk about with Bitcoin is absolutely going to happen. But people's timelines are the only thing so basically, all the discussions around Bitcoin pretty much are accurate, but the timelines a lot of people have, I think, are just off. It's just going to take a little bit longer than people think, but everything that people talk about is pretty much going to occur. At this point, it's kind of inevitable. We've already on that road, and it's just a matter of time. And then you have all these X factors way down the road, like AI, needing to use some sort of a currency. What are they going to rely on? What are they going to rely on? Some low liquidity altcoin, or are they going to use Bitcoin? Maybe they'll have their own internal coins and systems, but they'll ultimately settle with Bitcoin, right? It's a settlement layer. It's going to be the global settlement layer for AI and a lot of this stuff and the next wave of things. So there's a lot to be excited about, and people just have to stop looking at the daily charts and just really focus on the conviction in the math. And if math isn't your thing,
well, that's what I've been trying to educate people. And look, to some extent, most of my efforts have been pointless, right? Because I think most people are looking at the charts. Most people they don't have the conviction.
I think your spaces have talked some people off the ledge. Like, I mean, your daily spaces are awesome, and I mean, they're long form conversations, and you have a lot of really high conviction and very smart people in those spaces. And so I guarantee you, there's people listening in the background that are a little shaken up. Maybe it's their first cycle, and they're absolutely gaining conviction. So I would definitely say what you're doing is not pointless. Like, I know you didn't mean that really, but there's a lot of people that are getting educated behind the scenes. And I mean, maybe a lot of times it feels like an echo chamber, but that echo chamber is gaining conviction and education with the math and understanding what they're holding, right? And the macro.
I think the case is so strong. There's so much. There's so many elements to the case, and I think all these things that you are doing and all the people in this space. Can you just go on? I would like to understand before we get off a little bit. What is the difference between quantile model V2 and V1? What are the methodologies there? And why don't you explain how does the quantile? How do you get these quantum ranges? These quantiles. How do you get them?
Yeah, so the first version just ran linear. It did linear quantile regression across the full distribution, right? And so that is still useful. It's not like it's invalid per se. I mean, but what it does is it doesn't fully account for that decay, like we looked at in that ratio chart, right? So that ratio chart we looked at prior, where it showed the different peaks and the ratios, the multiples from the core trend. Basically, what I went on a multi-month mission to try and best capture that decay. Trying to find like patterns, you could say they're equivalent to the power law when it comes to that bottom 50%. So the bottom 50% of the data set, it clearly follows that power law or linear quantile regression, right? It's the same thing when you look at a log space. But the top 50%, there is a different pattern there, and it is a decaying pattern. And I mean, it could break, people can deny it, but the best way to model it is actually a stretched exponential decay. And the stretched exponential decay is essentially very similar to, exponential decay is a continuous decay rate. So the decay rate is constant, right? So Sminston's done some great work with exponential decay, and that's actually initially what caused me to look into the decay idea, was actually Sminston's work.
Which is sort of the halving thing we were talking about earlier.
Yeah, kind of like the degree at which we go above that core
Right.
trend, it kind of diminishes over time, like an L50, right? You could say, like, with this idea where a half-life, right, where things kind of over time level out. Now, yeah, Sminston did his decay channel. He did some work on kind of picking the tops of the cycle. So he focuses more on the very peaks, but he did find there was a pattern with exponential decay. Now, after looking into like over a dozen decay patterns, stretch exponential decay is the best fit. And even if you factor in the complexity of the model, because it has one more parameter, it's still the best fit. And it's essentially allows for some a variable decay rate. So the decay rate itself can change over time, so it's not constant. It can change, and essentially it just captures that kind of, you could say, lower volatility with Bitcoin, right? That we've seen, and I'm open to that changing. I'm absolutely open to that changing. I still think there's value in looking at it through standard deviations and other ways.
Yeah, so I wanted to show this one string. So this is the B1M app that we built. So we have these. This is showing at the power trend, right?
Do you want to make this full screen so we can see?
Oh yeah, how do I do that?
Because actually, I was checking out your website the last few days, and I really like. There's a lot of really cool things on the site.
Okay,
I like how you did Bitcoin versus gold versus the S&P.
Yeah. So I'll just share some of this so we can talk about it. Is this more or less full screen?
It's still not full. Oh no, maybe. Okay. Yeah, it's not. It's kind of half screen. It's not full screen, but
how about that?
Can you, when you share your screen, can you actually click on, or can you make it full on your background? Like, is there a way to make it full on your?
No, I don't know if we have that, but let's just stay with this, okay?
Okay.
So this thing here, we basically have the power law trend, and we just like multiply the trend, okay? So this one's at 3 times trend, and this one's at 0.5 times trend, right?
Yeah.
And so if you look at 3 times trend, right? Everybody's got their different trend line because their data is all sources of different. So our data comes to 5.6. We're using monthly data, and we're starting from October of 2010. And we're going back from earlier, even a couple of months can change the parameter. Using daily can change the parameter. Using hourly can change the parameter, right? So we're using monthly data.
It's pretty comparable, though. I've looked at hourly, daily, monthly, week. Yeah, it's all relatively similar. I use hourly, but
relatively simple.
Yeah, they're all similar.
So basically here, you look here, and so in the 3x, we hit 3x in the last cycle. We obviously exceeded 3x in 2017, and we obviously exceeded it. So it's not doing any volatility smoothing there, but we have the pasta mode here. I don't know if you can see it. If you click on the pasta icon, you enter Giovanni mode. You enter into Giovanni mode.
Oh, the pasta mode. Okay, I get it now. Yeah, sorry. I was a little slow in the draw there. The pasta mode. I like that. Okay,
so you get into Giovanni mode, right?
Mode here. Okay.
And you can see Giovanni mode. We actually have
the colors. You got the colors and everything. That's cool.
Yeah, we got the colors and everything. And so now we have the Italian flag mode, and actually you can see the historical. We have a declining volatility tops there, right?
Yeah.
So 3.77 the top there, 5.77, and 10. 10 times in this. Yeah. In this peak, but this is sort of a declining model. I'm not sure why it's sort of piecewise linear here, but whatever. But anyways, this is a little bit of a thing, and you can click on Giovanni mode here, and you have about Giovanni in there, right? The maestro of declining vehicle. We just had a little bit of fun in there.
Yeah, you guys have done a great job with that. I really like
it. And we also have, by the way, for people who don't want Giovanni mode, we can click. If you click here,
you got
yeah.
Well, what's his name? Josh mode, right?
Yeah, we have Josh mode. I for some reason, let me have to redo this. Oh, we still have. I don't know how to get.
Is he still sticking with his prediction of 444 in a few weeks? Like that?
He is.
That's
It's kind of.
like if it was next year next year November, okay, or
Yeah.
the year after November, but next month is not going to happen.
Okay. Josh mode activated. So here's the Josh mode, right? And now you can kind of look at Josh Mandel, the man who invented Forex. So you can see the current target Josh mode, right? And so we have, we printed a few things. This dashboard is more or less inspired by like the strategy dashboard.
Yeah,
right?
Makes sense.
And so we have the Bitcoin price, the model price, the multiplier. We're at 1, 24-hour change, the slope just from our data, log volatility, the model CAGR, right? And then where we will be at the end of the year, at the end 2030, 2035 on trend, right? And 2045 on trend. And then time to get to 1 million, time to get to 10 million. And then the earliest you could get there at sort of 3x trend, right?
Right.
So that's this. And then we did the same thing versus gold and the same thing versus M2, right? And Bitcoin's in a power law versus M2. And it's a little bit cheap right now. So it's below trend. But if you look at it versus, if you look at it versus gold, the model says we should be at 60 ounces per Bitcoin.
Yeah, we're way undervalued for sure.
We're way undervalued, but it also says we should be at 253 ounces of gold per Bitcoin in 2030 and 700 ounces.
That's crazy.
700 by 2035.
That's a lot of gold for one Bitcoin.
Yeah, but you know what?
No, I mean, it's possible. I'm not saying it's not possible. I'm just saying, like, if you think about that, like gold, like that shows you the value in the future of one Bitcoin. Like, I think most people, they understand gold has its value, but you just
all these things
picture that amount of gold on a table.
A power law, 94.8. The S&P is a power law. You can do a power law versus the S&P, right?
Yeah. And we're pretty undervalued versus the S&P right now, actually.
We are, yeah. And then we have this final chart here, which is these asset classes here, where, gold is up 40%, Bitcoin's up 16% for the year.
S&P is 0-10, the S&P. Never been the best performing, but it's always done decent. So
yeah. So, actually this is really interesting because if you look at just Bitcoin versus the S&P, the only years where the S&P has beaten Bitcoin are the years when Bitcoin just got trounced and S&P got trounced less.
Right. It's more stable. Yeah, I mean, it makes sense. It's a high market cap.
Yeah. And so the other thing we have in here, which is, wait a second, that was my Bitcoin Alpha stuff. No, that's not that. What do I want? I have a Bitcoin calculator here somewhere. Oh, here we go. This is really cool. The Bitcoin retirement calculator. A lot of people like that. They're like, okay, I have 10 grand a month in expenses and I'm going to retire in 14 years, right? Calculate. I need 0.57
That's really
Bitcoin
to retire. Yeah, that's really cool for people. And
a lot of people really love this thing.
Yeah, and it's based on math. That's the thing. It's not because you'll see this stuff floating around on X and in YouTube videos. Oh, just 0.1 Bitcoin and you're set, or 0.01 Bitcoin, you're set for life. And it's just not the reality. When you look at these sorts of tools, you can get an actual understanding based on the math, like what you really do need. And it's more than most people think, but it's still nothing crazy.
And it has these advanced settings, so you can put in your power law slope, you can put in your inflation rate. You can say, well, I don't think my inflation rate is.
And it's customizable because if someone's in a country, right?
Yeah.
Say they're in some third world country, their expenses are lower, so they can put in whatever number they want relative to their. So it's all customizable, which is cool.
It's all pretty customizable, and what you see is it includes borrowing, right? So it sort of assumes I'm going to borrow against my stack, and it says how much cushion do you have? Well, here I have quite a bit of cushion. Then I go down to 0 cushion here, right?
Yeah.
And then I sort of build up my cushion, and like if I live till 2060, I'd have 3 million in cushion, So, anyways,
we got to
Yeah.
get you on the life extension protocols, Fred, because we need your brain power for another 100 years. Like there are technologies coming out to do with life extension. I do think we're on
Right.
the precipice in the next 10 years or so, 20 years. Who knows? Right? No one
Yeah.
knows for sure. But like I know we're somewhere within the realm of actually extending human lifespan. Like, have you ever thought about that idea? Like, I mean, because also a lot of it's deprogramming yourself, because we assume, okay, we only can live so long, but who knows? There could be a breakthrough in that. Like, it's
It
not.
could be. I know. Look, I know Peter Diamantes, and he's got a whole thing there for longevity. So look, I think they're probably accurate.
Well, did you ever think there'd be these drugs that we have now for,
No.
like, they have the weight loss one, but now they have one coming out in the next few years to do with building muscle. That's apparently
Oh,
pretty
wow.
amazing. So, like, I don't know. I guess at some point, we could see that life extension.
Well,
Yeah.
one of the things I'm thinking about, PlanC, is I'm thinking about doing another one of these Bitcoin alphas. I'd like to do it in Austria. There's this Austrian kind of longevity health clinic,
Okay.
and I'm sort of thinking that would be a really cool thing. Some of the people may want to like do a week or 2 weeks at the health clinic, and then
Yeah, get
go.
some injections or just get
Yeah,
educated on like
exactly.
the
Like
options.
just
Because
get
there's a lot of
completely
wealthy
checked out.
people. Yeah, there's
What?
a lot of wealthy people going to those conferences. And so, I mean, once you have wealth, like once you've
No.
accumulated wealth, like what's the like health is really another form of wealth that's very important. So, I mean, it goes hand in hand. I do think that a lot of the billionaires and the really wealthy people, I mean, they end up researching like longevity and health all in the
Yeah, no, when I
other.
was there last about a decade ago, and Roman Abramovich was, he's part of the 60 people that was there, besides me. But he's in a bathrobe and like taking his tea and everything,
Yeah.
But it's a cool look. I think this longevity stuff is very cool. And look, I mean, I'm not saying I'm done with Bitcoin because but I do kind of feel like we understand at least the math behind Bitcoin more or less,
Yeah.
and
Well, now it's just getting the word out there. So, like, have you thought about getting on? Because I mean, with your track record, your kind of your history, you should be able to get on some of these mainstream large shows. Like, there's some big shows that you could get on outside of like the Bitcoin. Like, I'm not talking about going on another Bitcoin podcast. I'm talking
Yeah.
about going on, some mainstream show. Maybe not Joe Rogan at this point, maybe in the future, but maybe another one that's like gets a significant audience. That's
Yeah,
mainstream.
that's the thing. If anybody listening has anything, look, I would definitely like to, push kind of this message. I mean, I want to focus on this Bitcoin 1 million thing because I do think it's out there. It's not right around the corner, but it's out there. And I do think we're going to get there in the next 5 to 7 years. And I do think, the mainstream financial press is severely underweight Bitcoin. That's what I think.
Right, but
And
not even mainstream financial stuff. I'm talking about like there's all sorts of podcasts that are
yeah,
just people interviewing interesting people. And
yeah, I agree.
you have your background, you have the book now.
Yeah.
Obviously Bitcoin is a topic people are interested in. So yeah, to me that seems like that's, if something you want to do, it's a lot of work to go on all these shows.
Well,
But
the other kind of short-term projects we have is we made this giant shark, and it was expensive. We built this fiberglass shark that we showed in the Bitcoin Alpha. Sort of an orange shark. To symbolize kind of Bitcoin kind of taking over all assets. But we're trying to find a home for the shark now. So ideally, we want to kind of create a Bitcoin storefront or art museum type thing that we could just show people Bitcoin, not branded with any wallet or anything like that, but just kind of push Bitcoin, push the the story of Bitcoin in a capital like LA, or could be New York.
you have like a storefront in LA somewhere where you basically
Well, we've got this giant shark, which is
shark it'll get
it's in
people
the tank, and so we have this whole plan, and we're talking about that. But
well, that'd be interesting to show some. You'll have to show some videos once you get that set up for sure.
Yeah, we'll do. But anyways, that's more or less it. And I'm working on like a bunch of other stuff too with AI mainly right now.
Right. So AI and Bitcoin, you'd say those are your two most, like those are the things you spend most of your time thinking
Yeah,
about.
I mean, look, I think I kind of feel like I understand Bitcoin pretty well, and I have the conviction. So, whereas I feel like there's so much stuff happening in AI right now that I don't understand 100%.
Right. Well, and that
where I
can
can add some value. So we got some stuff happening in AI that we're going to roll out over the next month or two, and yeah. So, but look, I think Bitcoin is the less you do, the better. But the
it's
more
good to
conviction
distract
you
yourself.
have, you need to digest vast quantities of this stuff to develop the conviction, I think.
Yeah, once you have that conviction, like once you've achieved that,
Yeah.
then you really can just kind of go on with your life, and essentially it's a waiting game, and the whole game at that point becomes to just not do anything with your Bitcoin.
Right.
Like it for the most
And,
part.
the one thing is, look, I think when I started this with talking with you is like, I do think we're at this point where some point, likely in the next 6 months, we're going to enter that pink zone or that,
Yeah, the 80th plus quantile. Yeah.
And then the question is, what do you do? Okay.
Yeah, and we'll have to have some calls at that point because.
But yeah, let's discuss it then if and when we get there. But I do think, I'm kind of a big fan of this Kelly idea. I haven't used it myself, kind of like you. I've just hodled. But I do think if we get in there, that's the time to kind of start implementing Kelly, and then just get on a Kelly criterion where you're basically rebalancing at 70%. I think that could be really a general good way for you to live out the rest of your life with Bitcoin. You know what I mean? Just always be 70% allocated, and that's it.
Yeah, and just follow Kelly's
Yeah.
formula there, and you just have to decide how often you want to do the rebalancing.
Right,
Monthly
and
or
probably
yearly
once a year is enough.
Yeah.
So you don't have to be. I just think that it would be unproductive for us to suggest to people to trade.
Yeah.
I do think there was value, especially after holding it through last year. And again, does it really mean long term you're going to optimize? You probably know. Your best long term thing is just to hold Bitcoin. But I think the psychological factor is it's easier said than done. So
yeah, it's
I
more
think
about
we all have to figure out how to hold our Bitcoin 10 years from now, right?
Yeah, and everyone needs to understand their own personality, like what they can stomach, and like if it helps them to take a little bit off the table at the higher quantiles, whatever. Everyone has to kind of figure out their own strategy, where they're on life, what their goals are. So it's really hard to kind of give any blanket statements there, but definitely, if someone's thinking they're going to outperform by just trading, they're probably not going to.
Yeah.
And ultimately, either just hold long term or figure out some system that's math based, ideally, where you can remove your emotions. Because if you're relying on your emotions, you're just most likely not going to be making the best decision. So it's essentially follow some sort of a.
It's like that comic strip where he sees, "I've seen the enemy, and it is us."
Yeah, you are the enemy.
We are the worst enemy of our own performance.
Yeah, it's going to be a fascinating coming year, 6 months. A lot of these questions we have, they're going to ultimately be answered, and we're gonna have a lot more insights moving forward, and we're just going to continue to refine these models, ideas, and essentially, over time, kind of keep going with it. So it's going to be fascinating to see. Very last thing to answer your question, because I don't know if I completely did. The V2 actually has multiple upgrades. So one of the biggest ones is no crossing of any of the quantiles. Because that was
I didn't get that. What?
Oh, one of the big upgrades with the version 2 is it's mathematically impossible for any quantile to cross at any point in the future. So in the first version, there was some like Giovanni was saying with the first version, because it was all linear quantile regression. There's crossing at some point in the future. These quantiles will cross. With the newer version, basically, there's no crossing of any of the quantiles, because what I do is I do initially that linear quantile regression through the middle, the mean or median. And then I do an iterative one on the bottom 50%. So what that does is they all share the same slope. And so it finds the core pattern. So each quantile doesn't react. They're not all individually reactive. They're actually kind of coherent. They're a family of fits where they're all, and I actually run 500 fits for the bottom 50%. So I have a fit every 0.1 quantile. That way I can pinpoint how close the price is to to 1 decimal place. It's just a precision thing. It's not a huge deal, but it's more about they all share the same pattern. So the bottom quantile is not going to just move dramatically because we go down there. It's actually the whole bottom 50% of the data. It's the core pattern that I'm tracking, and I do the same for the top 50%. They all share the same decay that I've kind of mapped. So there's multiple improvements. It's the best decay function I was able to find, and it's all math based, and it's basically yeah, it's one lens, right? It's not to say it's the be all end all, but it's a useful tool, and hopefully people like it. And then there's lots of
Well,
other
I like it, and I'm very supportive of your quantitative efforts. So PlanC, just from me and a bunch of other fans that I know you have out there. Thanks for your contribution to it. I think it's really helpful. It's really, and I think also, people say that the charts are not important, but the charts are really important. Like presenting the information in a way that people can digest it is really important. So,
I honestly think the visuals, and I've said this
yeah.
to people, I think the visuals are 50% of it. And
Maybe more. Maybe
you
more.
have to understand that we're trying to reach people that are so focused only on the math, which I am focused on the math, but people that are focused on that, they don't understand. You have to be able to relate to the average person that's on X and on social media. Most people, math is not their forte, right? So they need something that they can intuitively understand. And so, yeah, visual is very important. And yeah, I mean, just getting these ideas out there as far spreading as we can. We're all fighting.
I think we've given you some homework. I would definitely like to see the quantile model versus gold, and I also like to see it in log. Visually in logs.
That's the next projects.
But
for sure.
PlanC, I'm going to hop. But man, it was great having you on. Appreciate it a lot, and